So what's up, guys? So I've been asked to, just how to set up a chart. So I'm just going to run through that right now. The first thing I'm going to do is look for key levels, right? So there's massive level of support here, and then there's resistance there. So that's just support and resistance. I think I have, so R range, S range, support, resistance of this entire range. So then we can do the mean or the equilibrium, whatever you want to call it. So it's about the middle. If you want to get specific, then just divide the two and you find the average. Okay, so it's about here. So the equilibrium is just a midpoint of where price would come back to. So, or coming back to the mean or mean reversion. So which just means reverting back to the average. In this case, these horizontal lines. So we've got resistance here, a break of previous resistance, support, break under, back finding resistance. So it's just a line to give you a visual aid, right? Visual aid. That's all it is. It doesn't mean that price is it, that price is it, that price is it, which a lot of people like they just get really zoned in. Oh, it's got to be on this line, or that's it. It's not on that line. It's a zone, right? It's just a visual representation of the zone. So however big the zone you want it will be up to you. So trading is subjective to what you see. So okay, what I see, what you see, could be two different things. So but what you're trying to look for is you're trying to look for confluence of the psychology of the market. So you've got price action traders, support resistance traders, continuation traders. So continuation traders maybe here, or here, or all of the above. So your resistance traders will be trading from here, right? Supply zone traders trading from the top, right? Or a retest of the supply, so break, retest the supply zone, and down we go. Potential obviously taking profits at this level and this level. That's why we're coming back up. So when profits are taken, when shorts are sold, that means the shorts have to sell and somebody has to buy. So somebody's buying the profits there. So that's why we get the pullback. And then sellers come back in and pretty much retest this SR zone. So previous support here, now resistance. Okay, so there's a little bit of confluence area there, and bang, another drop. Right, so there's probably some potential liquidations in these candles because of counter trend trading. Right, so there needs to be someone who needs to lose essentially, and that's why in the market you've got to think about mitigating risk, mitigating loss, because the market is made, yes, for people to win, but it's also for people to win, somebody has to lose. So nobody's ever going to be right 100% of the time. Impossible. But you can limit your losses. All right. So you need an edge in trading. You need an edge. Whatever that edge is, right now, an edge is just something that performs, well over time. Right. That's all the edge is. People fucking spruce it up. Oh, the secrets of trading. Or the mindset of the the elite. These are just buzzwords to capture your psychology to get you to buy the product. Okay, so there's no fucking secret, man. It's just you need an edge, and the edge is what yields results over time. So If you're a support trader, then you're only going to be trading support, right? So hopefully, you know, if you get stopped out here, right, maybe your trade plan says, okay, we're still in the zone of support, so I'm going to re-enter and then put my stop loss below the lowest low, right? So obviously this is a daily time frame, and you'd be pretty good putting your stop loss below that. Now it is probably a lot of pips. If I go to the open there, below here, it's not bad. 35 pips, it's not bad. 35 pips. I know 100 pips on one lot, depending on the currency pair, is about $1,000 on one lot from memory. So 35 is about $350. So it's about $1 per pip on one lot. So $350 risk there, right? And your reward, if you're support and resistance trader, then you're going to resistance, which is here. Okay. Then you're getting 714 pips. So on one lot, that's $7,140. Okay. In 1, 2, 3, 4, 4 days. 4 days. So you get about 7,000 in 4 days. All right. One lot is also dependent on the currency. I can't tell you how much one lot is because every currency is different, right? So I'm just going to see if there's one lot, but just make it easy. All right. So if you're a support trader, then that's where you're buying. You're buying here. You're buying break of resistance, previous resistance. We do have this. This is obviously the first initial break of the resistance here, or the high there. So that'll be a reference point. So you've broken there, you've come back, you've retested, and bang. So clear trend trading going on through here. So this is also called a rising scallop, right? It's a rising scallop. Just because it looks like it. To be honest, I don't know what the fuck a scallop is. I know you can eat it at fish and chip shop and shit like that, but I've actually never seen one. But it is a rising scallop pattern, which is bullish. Alright, but anyway, getting back, so, if you want entries, if you're a support trader, there's your entries. Stay on the fucking daily time frame. Look for an entry in the zone, right? Now look, see, you got another entry in here, so you might go on lower time frames to pick it up. Okay, you got another entry there, which is pretty good. So your stop loss would be below either that low or that low. It's up to you. But just going back to here. So the low there and 35. So 35 pips. Just want to see something. 35 pips. And ooh, he's still in. Alright. Because what happens is that there is liquidity. So there's liquidity here, right? There's liquidity there. Okay. People's limit orders are probably on somewhere in here, but their stops, majority of stops are probably in and around, here. So some only do 5 pips, 10, 15, 20, then you got 30 up there, which is cutting pretty close. So 35 looks like pretty good. In this scenario, it looks like a pretty good stop loss to have when buying at support. So your entry on support is there, 1, okay, 2 is here, right, 2 is there, so you have an alert. Now 3 is here, so even at the lowest point of the zone, it looks like you just make it at the lowest point of the zone. So if you're trying to buy in this daily candle, then yes, you're going to have to look on the lower time frames. You're going to have to break it down and have a look for a change of character or change of trend. Okay. Otherwise, you wait for the daily candle close and then you look for the retest into here and you buy that. Alright, so there's the second entry at support, is the retest of support, which is on the daily candle, which is good, right? It's a daily, because remember on a small time frame it'd be like a double bottom somewhere along the structure coming back up. All right, so then you're trading it back to resistance. So you know, you got a risk to reward of 11.42 for that, which is 404 pips. 404 pips, so it's about 4,000 there. So you're trading it up to resistance here. Right, that's your level. So it's another. So if it's one lot, that amount, $350 risk, so it's $4,220. We'll check the math on that because all the math is different. Because all the prices are different per fucking per currency pair. So here you have another entry, right? Another entry condition. So 35 pips. So there's your stop loss. Now your stop loss is in the zone here. Like stop loss is in the zone there. So your risk is going up because it's in the zone. But so whether you want to de-risk yourself by putting your stop loss in the appropriate place, but now your risk has gone up more, right? So now it's 91 pips. So it's almost $916 if it's one lot. So if you want to mitigate your risk to equal 350, then you need to reduce the lot size. All right. So I'll put that back to 35 just for this video. Okay. So let's see. So yeah, we're in there, right? So our exit rule is at resistance, and we don't get there, right? This time we get stopped out. So you're up substantial amount here. Like there's a lot of money that's been taken up. All right. So here is a loss, right? So this is where you need to have another potential signal, right? That says that all right, we need to get out. Okay, so if it comes up, right, and it comes back down, we want to make sure that there's still structure. See, there's still structure moving up here. So pull back and up, pull back up, right? So the lows aren't being broken. So the low of the red here is not broken. The low of the red there's not broken. Okay, so when it pulls back, the low there's not broken. So it's continuing. Right. So here, bang, our first low is there. Right. Good trend line. Okay, so the first low is there. Now it pulls back, closes in green. So yes, it comes down, retests, and closes above, which is good. Our next low is here, which it does get broken by a red candle. Okay, so it could be called loss, a break of structure, but usually the first potential change is a change of character, so it's a chop, right? So potential change in the characteristic of the move. Okay, so this could be your first warning sign. So now you have a new low here, right? So you write it, you put it in there. If it breaks the low, then you're out. Alright. So you got to change either you're out on the change of character, or you try to break the high. You hold to break the high. Okay, so you still got a boss there, right, which is a break of structure. So it still breaks the high, comes back up, but then it creates a low here. So high, low, right? So then you got a high, another high here, right? And it does break, but it breaks and closes red. So this is where it comes into play of the candles, like which side is winning. If it broke and closed green, then it's valid, but it broke and closed 50% under of the candle, which shows complete big bearish control. So now we have a potential another change of character. Okay, so a change of thing. All right, now I've got a boss. Let me just delete this. So break of structure. All right, So I've got a chop on the lows, so broken the lows, got a break structure on the highs. So that's just ranging. So it's ranging, right? And now this is the daily time frame. So if you're going, you just see it going up and down, ranging, right? So it's trying to take out. Now this is where a lot of traders get caught. So it's in the ranging market. So everybody's trying to either maybe add the position, or they're trying to like, oh yeah, they're getting the pullback, right? So they're pushing it back up, bang, comes back. All the lows here have been taken out, all the liquidation and the stop hunts. Okay. So there's liquidity on both sides, right? Liquidity on both sides here, and on the lows, all here most likely with stop losses. All right, stop losses. So they've all been taken out. Stop losses for the shorts. People trying to jump the gun here. There's also a support resistance here. So probably potential limit orders there, and there's stop losses just above that. All right, so take profits are taken. Bang. If there isn't enough liquidity, which it's hard to believe there wouldn't be enough liquidity in Forex, it's the most liquid market in the world. But if there isn't enough buyers, like if there's not enough buyers to buy the shorts, or the buyers selling at their profits, etc., and there's not enough people sellers, then there's an imbalance. All right, so when an imbalance occurs, it averages down, right? So then that's why if there's nobody buying in here and everybody's selling and getting liquidated, nobody's buying, then there'll be an imbalance, and it'll just go bang. It'll drop like that, and it'll drop absolutely fast because it has to average down when people are getting stopped out. So it averages down, and when people are taking profits. So people are here. There's eventual panic sell, right, all the way down. So, and that's what an imbalance is. An imbalance is an imbalance between buyers and sellers. Therefore, it averages up or it averages down, and it averages fast. So, getting back to the signals here for an entry, so you see support, 35 pips. All right. So my exit for this would be in this range here. I see it. I see a chalk. A boss doesn't know where it's going. If it doesn't know where it's going, and I'm up bloody 285 pips, so $2,850, then I'm out. That's it. I've had a risk to reward of fucking eight, a risk to reward of 11. You know what I mean? 1, 2, 3. I'm out. Simple as that. Now these trades will take fucking look 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 up to 12 days to play out. But this is on the daily time frame. Like obviously you can go onto the lower time frames and you can make these gains on the lower time frames, right? But the lower the time frame, the more risk. So you gotta have higher time frame confluence, which is like doing this on the daily. Okay. So yep. So second exit is a chop with a breaker structure, right? I think a lot of you guys use RSI, so I'll put it on RSI and MACD. Okay, so and I will go into it a little bit. All right. Interesting. No, that's right. Yep. So yeah, I'll just touch on RSI now. So obviously we have 50, which is the middle or the mean, right? Okay. Coordinates 50. So it's the mean. Right. Now 70 to 30. Okay. So 30 obviously being the lower band, 70 being the higher band. Now these are deviation ranges, okay, or you got like So the mean is the middle point, and anything that moves away from the mean is a deviation. So it deviates away. Okay, so when we're in bullish conditions, then the price or the relative strength index should be above, right? So it retests the mean, which is here. Once it does its 14 days, because it looks at 14 days of material for calculations. Okay, so you've got a double bottom there in the continuation. So double bottom on a continuation pattern in a scallop. Okay, which goes a bit lower in a scallop formation. All right, so I don't want to. I will finish off this entry and exit model first, but just giving context here for the RSI. So that's a break above is bullish. So your first break above is here, right? This level. So and then you've got a confluence level of a support resistance zone and a double bottom here. So double bottom, support resistance, continuation in a scallop. So then you could go long, which is a fucking huge trade, like massive. All right, 35 pips. Right, 35 pips. Up to resistance there. This continuation trade. 700 pips by the looks of it. Oh, alright. 1,000 pips. It's a 1,000 pip move, which is huge. So if like, one lot, about 10 grand, 10,400. Alright, so that's just context. So bullish, bearish, right? And coming back to the midpoint is called mean reversion. So where the price or the indicator reverts back to the midpoint, the mean. Alright, so price pulls back, right? The indicator pulls back. That's mean reversion. So once you have a break and you have a retest here, so which is a break, retest, then supply and demand, so it's the supply zone there, then you'd be short. Okay, and you just follow it until it's changing trend. Now there's no change in this on the daily until because the high is here, so it's got to come all the way up. So until the high's broken, it's ranging. Alright. Alright, moving on, and I'll try to stick more. And it's the same with the MACD. 0 point is the 0 point. It's the mean. Anything that breaks below is a deviation below the mean. Anything that breaks above is a deviation above the mean. Below is bearish and above is bullish. But the best signals are for shorts and or longs is a long somewhere below with confluence, right? Cross, confluence, pullback, almost another dip, and off it goes. Okay, right? Resistance, pullback, break, and supply. Boom. There we go. It's just if you wanted those entries and exits too. Anyway, back to this support resistance, keeping it simple. Okay, so we've broken above here, so it is a point of interest. Our next entry signal is here. Okay, 35 pip stop loss, which is good, nice healthy one there. All right, now you have come up here before, right? And on this candle, you failed to break that low. You failed to break this high, sorry. So this high here doesn't quite reach it. So it comes back down. Now this would be pretty scary. Obviously, you've come into this trade, you're up 315 pips, so about $3,150. Now it's come screaming back down. What do? Do you hold or do you get out? So that's something that you'll have to figure out. for me personally, I'd just be looking for the change of character, which is about here on the daily, so the low is broken, and then I'd be looking for an exit within here, right? If I was using chop, right, but in this case, I do like supply. Supply is there, so my take profit would be, so supply would be bang right on. So retest, so right on the retest is the supply zone there, and I'd be out at that level. All right, so comes back, okay, and you get another signal, all right, boom. 35 pips. Okay, so coming back, another attempt at resistance, and it fucking explodes, right? So it's up to you. Obviously, if you can hold it up, because eventually it will come back to this level and try to take out any liquidity that's been holding, because there's people that hold for a certain amount of time and they do not do nothing. So they're the ones that are going to get taken out, and they've probably got big positions because they've stacked orders, right? Stacked all the way down. So if you can add two entries and exit conditions, and but not just this, you're adding the two psychological mindsets of the break and retest trader plus your support mindset. Okay, so you've got your entry condition here. Then if you have a break and retest mentality here, then you can keep it going and you can get that complete move, 850 pips. Right, so you got a reversal candle structure there. Right, the lows are being broken. A retest of supply, which is your if you're still in and you haven't sold up here, then you get that one more retest and you've got to get out. Like you just got to retest of supply. If I'm in a long, is an exit signal. Retest of supply, if I'm in a long, is an exit signal. Okay, so you're retesting supply zone or retesting resistance, then you get out. It's closed below. It hasn't closed above the zone, it's closed below the zone. So that's your second out. Right? If you miss this one, then that's your second. If you're still in the trade, maybe you close 50% here, let it run. Right, that's a continuation strategy. So closing X amount and letting profits run. All right, let's flip it around, huh? Oh, look, we've got one more entry signal here. All right, look, we got one more entry signal there. Bang, bang. Now we're making the market's making huge moves, right? Because liquidity is now up here, yeah. Short liquidity is up here. Buyer liquidity, the last of the buyer liquidity is here. Okay, so now it's come back to the mean, and this is a big red flag to me, right? It's an M double top on the daily. Right now, there's probably buyers in here like, yeah, fuck, that's new support. So now there's a shitload of liquidity here, right? So you buy your break, it's your first retest of support. So your second retest of support is here on the new support. So this we got to follow our rules, right? So this is our entry signal for that one. Now we're holding to resistance, but I have a feeling that it may come to about here. Right, so 156, and then reject, and then try to take out all the liquidity that's built up here. That's just my personal opinion, right? Because there needs to be liquidity for banks to make money, and if there isn't, then there's an imbalance, and down it goes. So if we can come down, take out stops, and come back up and still hold, then the bank's got another, or institutional big money has got another chance to take another scoop like that before potentially moving up. Or if there's an imbalance, then it will move down. Depends how many, which institutions are going long, and retail. If the institution and retail are both going long, then it's going to go up. Okay. Alright, so let's flip it around. So resistance. So we have confirmed we've broken resistance there. So we're looking for a new resistance, right? We've come up and broken through again, so come up there, come back down. So there is confirmation on this trade, and here, like we're closing sort of in the zone, but the real one is here, right? This is our median zone, and our close below is here. Come back and retesting is there. So that's the break and retest on the short side. So you're really swinging this. This is called a swing trade. Okay, so you swing one way, and then you go with the next 35 pips. Right, so somewhere in this wick on a lower time frame is where you'd be looking for a short, and you want to try to align it with one, this resistance level, and two, or so I should say support resistance level, and or the median, and two, probably a supply zone in this candle here. That way you have your confluence, your three confirmations. All right. So the next short signal is, so yeah, you do get a close in here, and your retest is there, right? Because the market's bullish, so we would want to be as safe as possible. So retesting is the way to go when you're potentially swing trading or counter swing trading. Okay, so here, bullish candle through, so closes above, right? Closes in the zone, closes below, retest. So you either want on the wick there or the wick there, and that'd be your entry for the short signal, so the retest or the close. Now you hear what I'm saying? So close above, close below, yeah, right? So you're closing in the zone, closing below, retest. It's got to close, right? Patience. Easier said than done, don't worry, easier said than done. But you get there, okay? So first target potential is here, right? You've closed below. Now you have closed below here, so you're looking for that retest. Closes above, so nothing. Closes in, nothing. Closes in, nothing. So there's nothing there. Like yeah, on the lower time frame, there probably is something. There's probably there's an SR zone here. Right, majority is probably a fucking SR zone here. So there's probably something in there. So you can take 50%, and then potentially let the profits run. So now you've just capitalised on both moves. It's taken a good couple of days, but on that one, probably in 2 weeks, some shit, 3 weeks, back almost an entire month. Yep. Easy. Oh, I don't know. Easy for me to see. So there's the retest there. So closing at the mean, because there is support there. So close below here. So maybe a little bit there. But you'd have to go on a lower time frames for that. So anyway, that's entries and exits with support and resistance on a daily time frame. So if you're on a 4 hour, obviously look, you can see the double top there, or the retest of supply here, bang, and down, 1, 2, another retest of supply there, so but, so lower high retest of supply, lower high retest of supply. Nice stepping pattern here. So this is where you trend and your pattern continuations. So step up, wedge. Looks like another sort of step up pattern. Bit of a just the last hurrah, boom. So because there's nothing really. This is where a lot of traders get caught in that type of shit here, right? You need You want clear and easy patterns to read. You don't want difficult, which is what a lot of traders seem to do. They try to guess when you should just be looking for this. But reaccumulation, if that was your strategy, bang long, or you wait for the break of this high, come in here, you can see it consolidating, bang. Alright, it's 4 hours. Breakdown is going to be consolidation. So a flag pattern, bull flag pattern happening at the midpoint, bullish, bang, break, retest, on off you go. High, breaking the lows, right? So chock, retest the supply, take out liquidity off here, so all the short sellers, right? Another low, so BMS, break a market structure, or boss, lower low, high, low. So lower low is just the boss. So lower low is just the BMS, so shit like that, right? So you want to be in the retested supply up here, okay? Which is also the stop. They're trying to stop out this here, which you do. See, look at that. If you were to do that, your 35 pips, bang, gone, liquidated. Alright, so there's your short entry on the retest of that supply, which is here, or resistance, and bang down to the support over there. Alright, well, I think that's long enough for this one. I'll go into other things, but you can see clearly on this chart, right? Key levels. So just to summarize. So key levels, where support is. So the break, bang, support, bang. Okay, support through here, right? But your demand zone is there. Boom, retest demand, bang, bang. New zones created. Now you just got to respect those levels and wait. You either wait for those levels for that move, or you try to get into the continuation patterns or the trend trading patterns. So the trend trading, okay? Stops in the appropriate spot, right? Targeting, you got to stick to your plan. You got to have your targets. So your targets here, or your targets with the the second is a chock and with a break of structure, or BMS, reversal candlestick pattern within the top of the move, which doesn't quite reach say resistance, then you get out. That way there, like, you've still secured profits. Maybe you do 1, 2, 3. Maybe you have 3 take profit targets within here. So one there, potentially one on the SR zone here. So that way there's 2 take targets being taken, and your third is still in the run. If it comes back, maybe your third take profit is either at resistance or on the pullback of the second take profit. So that way there you just fully close there. And I think that's it. So I'll do another video on RSI, MACD, and how, because it seems like a lot of people use that. Me personally, but yeah, I have a look at them because I am trying to see the confluence, the psychology of the market. So it'd be pretty stupid to just try to do my one thing, right? When my one thing is also dependent on the psychology of a lot of other things. Okay, so I don't lock myself into just one way of doing things. I try to look at the entire picture. So yes, I'll put on the moving averages. Moving average ribbon, right? Okay, so there's that. I do not like the SMA. I like the EMA. It's more sharp, and obviously it's the moving average. The math is different. So you can see continuation trading. So this is the trend trading for moving average traders. So you have your first sort of price breaking the 200 there. So signal of potential reversal. Supply here created, bang, bang, bang. Okay, so if you wanted to use this, and then you need a close below, a retest, complete close below all EMAs, confluencing with each other, or trending with each other, the bands are moving like that in unison, so then your short position would be exactly where I put that. So you're capturing the confluence of that. You've had a break below RSI, so you're capturing the confluence of that. And there is a MACD cross here, which is you're capturing the confirmation confluence of that, because the MACD is lagging just a little bit. So your entry would be just below there. Alright. Anyway, that's it. Ed is out.